Right, so my name is Peter Davies. Let me get you a picture of me. I'm the founder and CEO of Jigsaw Trading. I'm going to be a host for the next 45 minutes. This is me at a proprietary trading firm in the financial district of London. One of the many proprietary trading firms I work with and communicate with, not usually on a daily basis, but certainly on a weekly basis. And today we're going to be looking at how firms like this turn fresh graduates into traders over the course of a few months. We'll discuss the most common mistakes retail traders make, the main reason they often get nowhere after years of trading, and also show you a different approach and share with you what I think the 3 keys to success of a trader are that I live by. So the goal today is empower you with the knowledge that will enable you to develop crucial trading skills, which in turn will allow you to start trading with confidence and finally get to profit. Now, what I see in the retail or the at-home trading industry is people falling for the same false promises over and over again, that you can buy a course or a system, learn it over a weekend and start making money from it on Monday. That trading is just going to be so easy with the right secret system. The promise and the belief is that learning to trade is just a little bit harder than learning how to flip burgers in McDonald's. So every day, thousands and thousands of people buy this promise, and every day, thousands of people realize they got ripped off again. So if you're looking for an instant solution to making money from the markets, it does not exist, but there are lots of people that you can give money to who says it does. So what happens is you buy one course or one trading room or whatever after another, and each time you learn nothing and you don't move forward. And I've met people that have been in this cycle for 20 years. Now, the smartest prop traders, not the average prop traders, go from zero trading experience to trading the firm's money live in 4 to 5 months. Those are the best guys, right? Average guys take a lot longer, right? Every week, though, all of them are seeing steady improvement until they earn the right to trade the firm's money. The home trader that's looking for the easy way to trade spends 5, 10, 15, or 20 years failing to learn how to trade. And that time, your time is precious. So we shouldn't treat that time as an unlimited commodity. It isn't. So most of you today actually have a lot more experience than anybody who's walking into a prop firm today. Mostly, they take guys from the prop firms, employ people with no trading experience, right? It's just that many of you have a hard time knowing which of your experiences are actually useful and which aren't. So you'll all have now something that is of use. You'll have things that are useful in your knowledge and things that are absolutely useless as well. And we'll sort that out shortly, but just get used to the idea that improvements are going to come quick and fast once you start simplifying things and forgetting about magic systems. So close your mind, open your mind, close Facebook, switch off your mobile. Let's make sure we all get the most from the next 40 minutes. Now, we've got a list of careers here on the left, right? I'm not sure about chef. That looks a bit short to me. But if you compare the career path and the rewards of a trader to the careers on the left, it gives you a sense of perspective in terms of what you're trying to achieve. So we know that a lot of bright minds go to the world of professional trading and they don't get profitable on day one, and they don't go out and buy a magic indicator that makes them profitable on day one. So like any of these careers on the left, even after the prop traders get their education, they don't start off on the top rung, and so is your trading. Can I ask you just to mute your mic in there in the background? We're getting a lot of sighs and stuff, if you don't mind.
Oh, sorry.
That's right.
Sorry about that.
So no worries. So, with any of the careers on the left, even once they finish the education, right, they don't start off on the top rung, right? Whatever it is, if you're a school teacher, you spend some time, training as an assistant teacher. An electrician, you're not going out on your own, you're taking an apprenticeship, that kind of thing, right? So it's the same with trading, right? As a trader, we can expect to have a period of losses at the start, but at some point we should start to see gains, which will grow with our experience, right? That's how it works in the professional world of trading. And that is the reality of how it works with the people that make it at home profitably, right? That's what happens. They don't just get to profit and that's it. They never grow. Okay. So regardless of how many people are selling instant solutions to your trading problems, this is the reality of what's going to happen. You're going to make some small profits at the start, and you're going to have to keep working to grow those. Right. But if you are aggressive and focused, you should be able to get to profit in 4 months. Right. Now, that doesn't mean being ready to order your Maserati in 4 months. It means getting out of the cycle of losses you're in and starting to grow your account. Now, if you would like to be getting out of your loss cycle and into profit in 4 months, just nod your head. I don't need you to type anything. Just nod your head, okay? Now, also, ask yourself, if you just nodded your head, are you actually willing to do something different from what you're doing now to get there, to make some changes? Because if you are, you're in the right place. Because what I'm going to show you now is going to require you to approach the markets in a much more disciplined and structured way than trying to get somebody else to tell you where to get in and out of the market, right? And it's going to pay off a lot faster than trying to get somebody else to tell you where to get in and out of the market, right? Because you know what's going to happen. If you've paid for that thing 15 times already, just don't pay for it again, okay? So what we're going to do is we're going to walk you through 3 keys of getting to profit. 3 things that you need to do differently for trading to make sense and for you to make real measurable progress. And it's probably not the 3 most obvious things, but you're going to see why these things are so important as we go on. Right. Have you ever heard an educator of any kind tell you this? Right? You're driving instructor. No? Of course not. So most people have learned a skill that they improve with over time. Driving is like one that most people have learned, right? A lot of people have learned musical instruments, riding a bicycle, martial arts, learning a language. But what is it we hear so often in trading books and trading forums? The thing that we overhear all the time is don't overtrade, right? And so what people end up is they end up programmed that trading frequently is bad. So they tell you what, they say, right, start off swing trading, buying positions you can hold for weeks. They say that's safer. But if you buy positions and hold them for weeks, it actually takes weeks before you get any feedback about the performance of your individual positions, right? So if you're a swing trader, how many positions you're going to take in here? If you're holding for weeks, maybe you can do 10 at a time. Maybe you're going to take 10, 20, 30, 50, maybe 50 or 60 trades a year. So in a year's worth of trading, let's say you take 50 trades. Does that represent significant practice? Does that represent doing something so often like you did with your piano lessons that you're now really great at it? And the answer to that is absolutely not. It's one of the many pieces of conventional trading wisdom that sounds really smart, but actually causes losses. You trade so seldomly that you get bored of the waiting time. You don't get to take the hundreds of trades it actually takes to get some decent statistics booked. So you end up looking for new methods or changing the way you trade before you get enough information to make adjustments. So these guys, there will be guys here who've taken swing trading lessons and after 3 months, they've given it up. But 3 months isn't nearly enough with long-term trading to get the kind of experience and to get the kind of stats to know if your methodology is working. Right. So the reality is that 100 trades a week is a much better target for a new trader than 100 trades a year. It's more time it's more time in trades. It's more experience entering the market. It's more experience exiting the market. It's really honing your skills. So if you want to get good at anything, you need to practice a lot. It's the same with any skill that you learn, and trading is no different. So in prop firms, the firms that I work with, they start traders trading many times a day. And these prop firms, they invest heavily in teaching their interns, and they want to get a return as quickly as possible. Now, I'll tell you, the prop firms that I work with, the traders do not pay the prop firm, okay? The prop firms go and find bright kids. They take application letters. They look for kids, like, you know, when I say kids, I mean, 22, 23, that kind of age. I've known them as young as 18. They're looking for a letter that says, this guy's got promise, this guy's got something a bit different. Sometimes they go to universities and see who's doing well in maths. But they're looking for bright people with no trading experience. And they look for people with no trading experience because they've got no bad habits. And they will then give that guy a data feed. They'll give him a seat in the prop house. and they will give them training. The training is usually 12 weeks, and it's about 25% of actual real, like full-time education, and 75% hands-on, right? That prop firm does that because they feel that is the fastest way to get their return on the investment in that person, and also the fastest way for that person to become profitable. So they teach short-term trading techniques because in their experience, it's the fastest way to get a return on their investment in that trader. It's the skill that they can teach the fastest that leads to profits in the shortest time, and also gives the trader the most chance to learn because he's repeating the same thing over and over again. Now, they also use very different tools to do so, tools that are actually alien to most retail traders. Now, at least once a week, I'll get an email inquiry asking something along the lines of, you know, I've been trying to trade off the charts for 5 years. You know, I like this stuff that you teach, but it looks a bit difficult. And they say that without noticing the unintended irony. After all, what is easy about trying to trade off charts for 5 years and failing, right? Partly, it's because of something called the sunk cost fallacy. The more time they invest in something, the harder it becomes to abandon it, regardless of the results. So a lot of people think that because they invested 5 years in trading with charts, it will take them 5 years to trade off the ladder. Now, I'm just going to go back and roll back a bit. This is a professional trader. This is his desk. These center screens are what he's actually trading off. These charts are just some long-term charts, not even intraday charts. This is news. This is news. This is the desk of a professional trader. And that's a trader who broke his own record a couple of weeks ago and made $1 million trading day without using charts, right? So people say to me, oh, look at this price ladder. It looks really, really difficult. But they've been trading off the charts for 5 years and gotten absolutely nowhere. And so they say to me, you know, I know that the professionals trade off the ladder, but I want to do something easier. And it's like, guys, don't you realize the prop firms are taking the shortcut already? So prop firms intentionally pick the trading techniques that will get traders to profit the fastest. And I get people coming to me and saying, look, you know, I need an easier way to trade. I want something a bit more simpler. And the market doesn't really care what you want, right? And you see what people are doing here is they're basically setting up roadblocks themselves. It's a loser's mentality. It's a form of self-sabotage. Sticking in a candlestick comfort zone or in a charting comfort zone that has not paid any dividends in any way, yet really wanting to stick with it because it's their comfort zone. The good thing, though, for those that do kind of try a few different things, that try the price ladder, progress comes really fast. It only takes a few weeks to start seeing what valuable information it provides. Now, that doesn't mean 2 weeks of profit, just 2 weeks to see what you're missing out on, okay? So if you're 5 years into sim trading and telling yourself that professionals that use this stuff are intentionally trading the hard way and that what you're doing is a simple way, just have a think about how realistic that is. Right? These firms just want to get people to profit as quickly as possible. So here's the real key number one. The more often you trade, the faster you progress, right? So multiple trades per hour is actually a good target for an intraday trader. Typically in a prop firm, they don't even have high profit targets. They'll want, they'll move somebody from a sim account to a live account if they think that trader can book $200 or $300 a day. That's it. Just churning like maybe like 10, 15 very short-term trades, $200, $300 a day. They just want to get them to that point, and then they can grow that trader from there. But it is a big milestone from going from a net loser to a live trader. Now, a lot of traders, what happens is they go from sim to live, and then they go back on live because going to sim mess with their head. There's a lot of traders who are live, professional traders who are live, and they might be trading 10 contracts or 20 contracts positions, and then they get permission to go up to 30, and that messes with their trading, and they have to work through that to kind of get the confidence to trade 30 contracts. This is all absolutely normal, right? Now, multiple trades an hour is good, but it doesn't mean just sitting down and trading randomly, and we'll get to that in key 2. It does mean being very focused and precise and just taking good opportunities. So trade frequently. The more you trade, the faster you'll improve. Now, it almost seems too simple to be one of the most significant changes to make to your trading, but it's not. Just trust what the professionals do. Now, one of the second key to success. Has anybody ever told you this, right? Now, you're going to recognize a degree of sarcasm in this presentation. That's because I am English and I was born with an extra sarcasm chromosome. But it's only to highlight how strange some of the conventional wisdom on trading is. Now, you probably don't think that what you're doing is betting against the market or trying to predict the future, but a lot of traders are trying to do just that. Now, let's first all agree that both of those things are not healthy in trading, right? We don't want to be banging our heads against the market all day by betting against it. And we also know that we don't have the power to predict the future. So what is it that many traders do that has them fighting the market all the time? Well, the biggest issue by far is this focus on turning points in the market. Typically, trying to figure out where the low of the day will be and buying it, or where the high of the day will be and selling it. So basically trying to predict the start and end of moves. Now, everybody here knows about the concepts of support and resistance, and it's quite normal to look for the best way to find support levels in a market. So typically old highs and lows. Some people use Fibonacci, some people use long-term volume profiles, pivot points, market profile, Elliott wave. If anyone has even ever figured out what Elliott wave is. But the problem with this, it's really, really simple, right? For a market to get to support, right? There's only one way a market can get to support, and that is by having a move down, right? So when you buy support, you are always buying a market that is moving down. And that is the definition of betting against the market. Now, if you ever get a chance, whatever market you trade, pull up a time in sales and watch a move down, right? And when you watch that move down, have a look at the size of the contracts trading, the size of the sell orders trading on the way down. So if you look at like the S&P futures, you'll see 100 lot trades, 50 lot trades, 200 lot trades, right? All hitting the market on the way down, all sell orders, right? And you've got to ask yourself, right? Are they the dumb money? Because there's lots of people who believe that if they don't buy at support or sell at resistance, then they've missed out. But if you watch a move down, you'll see lots of really, really, really big orders hitting the market all the way down. And those people are not a bunch of idiots, right? This is the smart money, right? So the retail trader is watching all those 100 lot contracts on the S&P, maybe like 5,000, 10,000 on Amazon, maybe 50, 30 on crude. They're watching that and they're watching all that going on, seeing it move down, knowing it's moving down, and they've got no intention to trade except at some predefined support level, right? Now, what happens when you get support? Well, basically it's random, right? There is really no way of telling whether a support level will hold just because it's a line in the sand, right? So whatever way you create these levels, the problem is always the same, is that you're trying to buy a market that's moving down, right? While you're watching a bunch of really big traders selling the move down, okay? Now, there are more sophisticated ways to trade that involve levels. So it's not that the levels themselves are bad, right? I'm not saying you can't use levels, but it's the way that you approach them by trying to buy support and sell resistance that is bad and leaves you getting run over again and again and again and again. Okay. Now, if you want to find out more about the real way to trade this, basically what you do is you use support and resistance to help you define a bias in the market. And if you use support and resistance to help you find a bias in the market, it actually gives you a really good edge in the market so that you know, okay, market's moved away from a resistance level. I'm going to change my bias to shorts, and I'm actually enjoying some of those big traders, those smart traders on the way down. But the bottom line is that at any random time in the market is always more likely to continue doing what it's doing than to suddenly change and to do something else at any random time. And it's the same when you're at one of these levels. Okay. So if you're just trying to buy support and resistance, then it's time to change and do something else. So how can you make money? Well, the way you make money is, well, pretty much any way you like. So the support and resistance focus is based around catching the bottom of a move and trying to ride it to make lots of ticks to capitalize on the extended move, often because of the promise of making, you know, like 100 ticks a day on crude from your $1,000 account. So you can make money in the markets without any move at all. So markets like the 2-year Treasury notes, they barely move, but will trade 250,000 contracts a day. You can make money in fast markets, slow markets, markets that don't move. You can make money trading news events. Now, how many of you, excuse me, it is late here. How many of you watched the market go dead at lunchtime and decided there's no opportunity there? How many of you look at the clock at 11 a.m. Eastern and say, market's probably not going to do much for the next 2 hours? Well, that predictability that the market's actually going to die, or the predictability after the news, that is your opportunity, okay? Now, you don't even need a high win rate. Some setups will give you an opportunity to make a lot of ticks, but risk just a few. So you might not even win half the time, but the risk-reward ratio is where you profit. So the key to making money from the markets is observing a behavior that occurs repeatedly and then exploiting it. And it doesn't matter what that behavior is. As long as you can identify the behavior in time to exploit it, you can make money from the market. This is what professional traders are doing day in, day out. Now, this isn't new. It's just new to frustrated traders like this one from, it's got to be about 18 months ago now. So I was sitting on my PC one night when a frustrated trader, he sent me this message. He sent me a message on Skype, and I don't think I've got the Skype message. But basically, let me just go back. I haven't got his Skype message. He sent me this message on Skype. Basically, he said, I've had a tough day. He said, nobody can make money in the markets. He said, that's it. I'm done with this. This is stupid. Nobody's making money in the markets, right? So basically, he'd had a tough day, and I wasn't even trading at the time. You know, I'd actually taken my daughter to the hospital at the day. She had her appendix out, not a day I would normally trade. And this trader's having a tough day trading sim, crude. And his message was along the lines of, this is stupid. Whatever I do, I lose money. He's like, anybody making money trading. I don't think anybody's making money. This is all nonsense. So I did have my trading screens up. I wasn't planning to trade that day. And I just looked across my trading screens at crude, and I saw it was pretty lively. And I said to him, like, starting now, can you make 3 ticks on a live account on crude? And he said, no. He said, I'm not even going to trade my live account anymore. He said, but anyway, whatever I do, I'm going to lose money. So I said, wait then. I said, I'll tell you what, give me 5 minutes. And then 9 minutes later, because, you know, I was late, I showed him this, right? Now, this is not a hero trade. It's just 3 ticks and 3 contracts, which is $90 before commissions. And I hadn't planned to trade that day because, like I say, my daughter was in hospital recovering from appendicitis. All I did was see that crude was moving up, and it was moving with a fair decent amount of momentum. And I bought it and stayed with it for 3 ticks. Now, if sellers had stepped in, I'd have bailed on the trade. Now, why 3 ticks specifically? You can see I was in that trade for just over a minute, right? Now, why 3 ticks specifically? Well, to be honest, at the time, it was the first number that came into my head. I just wanted a quick scalp. I know I had to get back to him in 5 minutes, even though I didn't. And I'm not really an expert in crude. Now, there's times when you could trade a trade like this 10 times an hour. It's a behavior that repeats itself over and over. And I just did this to prove a point to someone that was losing through trying to pick the perfect spot. So instead of trying to pick the perfect spot, I'm like, oh, it's going up, I'll buy it. And the point was simply, I saw what the market was doing and I traded it. I didn't try to predict a turn. I didn't try to predict any change in behavior. I traded what was going on right then. If it had started to do the opposite, I would have just got out, right? This isn't clever. It just requires you to be decisive. If you get in long and sellers appear, you get out. That's it, right? Now, even like, yeah, are you suggesting 3 ticks is the magic number? He's still looking for like this hidden, deeper meaning. And it's like, no, dude, it was going up, so I bought it, right? And all I used to do that was this. Now, it's far less complicated than the sort of trading that most retail traders do with their 4 screens, 6 time frames, 100 indicators and all that. And in fact, I didn't even use all of this. I just used the volume profile on the left to get an idea of where traders are positioned. And I used the trades here to see that momentum was on the buy side. Now, the sort of behavior I found in this case was just related to volatility. Now, had crude been standing still in a tight range, I could have used a market making technique. Small, simple, regular trades. Do that well, and when the opportunity occurs, scale into a bigger position when the market runs. And that's your entire trading career. That's it. That's all you need to do as a trader. So the real key to number 2 is just go with the flow. Trade what the market is doing right now. I know I can hear you thinking, but I wouldn't make that much money doing that, will I? I know I need to make, I need to make 100 ticks a day on crude to leave my job. Well, at some point, maybe 2 years, 5 years, or 10 years into this endeavor, traders realize that chasing those big trades is what's causing their losses. They've got they want to go from zero to hero, right? And it makes them trade against the market. So making $90 a trade is better than losing every day or sim trading. Now, if you could make $90 a trade and you trade for 2 hours a day, and let's say you could average, let's say on average, you did 20 trades and you got 15 right at $90 a trade. Okay. Well, that's 1,800. It's like, it's $1,500 a day, right? Scale up a bit. That $90 could be $450 a day. Do that on multiple markets, your profit raise again. That is the key to making money as a trader. You set your goals lower per trade, more frequent trades, and then scale up. Don't worry about making massive profits today. Just make some profits. So like I said earlier, profit, even for a professional trader, there's first of all, profits are one milestone on the journey. It's not an end goal. So if you try to go from losing to being the best trader on the planet in one step, you will fail. So this is the path of a professional trader. Book some profits, and then as you get better, recognize when you can push your advantage and actually scale into a bigger position. Now, key number 3, on to the final piece of the puzzle. So there's a belief out there that you have to be a trading Einstein to discover your own method of trading. That those people, there's like a very few people that can actually create a trading setup. So most traders decide at some point to go out and buy a trading method. So I get emails all the time saying, I don't want to bother with the theory and I don't want to know why the market moves. Can you just tell me where to get in and out of trades? In other words, they want a pattern, a signal to get in and out that they can just repeat without worrying about why it works. Well, what happens? Well, technique doesn't work, does it? Or it stops working and you've got no idea how to fix it. So a lot of traders really have no idea if a method that they're using is almost working or totally useless. So most people, a trading method has one of 2 outcomes. It's either profitable or not. It's either working or broken. There's very little almost there, or this just needs a few tweaks. After all, if you don't know how something works, how are you going to tweak it? How are you going to fix it? How are you going to know what conditions it works best in? So acquiring a system is a shortcut lots of traders want to take, but the easy way ends up being the hard way. Okay, so buying one technique after another for years is very, very frustrating. It can take a huge amount of your free time, but it's all for no reward. So what the prop traders do, they are taught how the market moves. They are taught what triggers moves in the market. And of course, they're given a selection of setups to choose from. But it's not just the setup. They're given the cause. This is what's going to make a move in the market. But your retail trader is in a never-ending cycle of hope and failure. In prop firms, they have this different approach. So they teach first, this is how the market behaves. Not how it behaves all the time, mind you. They're not turning people into traders that can trade any market, any condition, any time of day. They specialize. So they teach specific behaviors, when they occur and how to spot them. And that differs between different professional firms who generally deal with, generally try and corner their own specialty in the market. So all of the professional traders I know are specialists, and I can't do what a lot of them do, right? And I wouldn't even try, to be honest. And sometimes when some of them tell me how they're trading, it's like I'm trying to listen to it, but I'm also trying not to get excited about it because I hate to think that I'm going to change what I do because I've just heard somebody else doing something different, right? So when I hear somebody tell me this stuff, I think, wow, this is really interesting, but it's just not my thing. So I've got my own little niche. I've got my own little comfort area. I don't claim to be able to go to any market at any time and be able to trade it, because there's just no need. So prop firms, they teach behavior, then they teach how to exploit that behavior. All the trader does, I want to trade, give me a technique, doesn't work. Give me another technique, doesn't work. Give me another technique, doesn't work. Over and over and over again, right? So in the prop firms, they give the traders also enough room to make that technique their own. If you understand how the markets operate and what actually causes move in the markets, if you're given a few basic setups, it's actually very difficult not to see other things happening, right? Sometimes people just don't have the confidence to act on those things because they've seen them themselves, and they actually think, you know, to create your own setup, you've got to be a trading genius. But the real key here is if the trader doesn't do well, if this trader here doesn't do well, they're going to know with 100% certainty whether they're lost because the market behavior changed or that their execution wasn't so good. Something that very few trades at home will ever know. So this is, I'm going to make a little ding, ding, ding. I've got nothing. If I had a wine glass, I'd probably be able to put a spoon against it and make a ding, ding, ding. So wake up. If you're asleep, this is the most important part of this webinar. If you learn just one thing today, make it this. Learn a behavior of the market first and then figure out how to trade it. Okay. In fact, you should have two trading plans. One that describes the behavior that you're going to exploit, and another that defines how you'll trade it. Now, that behavior could simply be something as simple as the moves after the moves after some news, or the moves after a Donald Trump tweet, or the first pullback after a big move against a trend, right? Just learn how the market behaves and what you're going to exploit, and then define how you're trading. And with that, even if your trading sucks, and it will at first, you will know if your problem is the execution or if the market didn't behave as expected that day. Like I said, there's volatility plays, there's plays for when the market really slows down. We had a guy, Steve Lee, who did a webinar at Jigsaw. He's doing really well. All he trades is when the market slows down. He trades the S&P when it slows down, and he gets 3 ticks, and then he gets another 3 ticks, and then he gets another 3 ticks. And all he's doing is waiting for the S&P to go in a little range, and he's scalping the range over and over and over again. And when he usually stops at $1,000 a day, right? And now he did that when the turning point for him, we actually tried to come to me and buy some education. I refused because I said that knowledge wasn't his issue at that point. His issue was he kept changing what he was doing. And if he just focused on what he knew about how the market worked and just find himself a little niche, that would be able to be profitable. And that's what he did. Okay. And I'm going to give you an example. Now you can take a screenshot of this if you like. This is an example, a real example. And this is a trade based around the behavior at the open of the S&P 500. Now the details really aren't that important for what we're doing today, but you're fine to screenshot them, take this away and watch this yourself. So what we have on the left is the result of me spending time looking at a certain behavior. So I was sitting there at the markets, watching the markets every day, and I'm seeing a certain behavior when the market opens. Now, don't worry about remembering the exact details. We've got lots of videos on the site describing lots of different behaviors you can exploit. Let's just get the concept. So what I did, I was sitting there every day at the open, and I'd always been drummed into me, never trade the open, never trade the open, never trade the open. But I kept seeing this same thing happen. So what I did was I outlined what I was seeing. So like I mentioned earlier, this could be anything. It could be the market keeps sitting in a 3-tick range at lunchtime. It's just something I saw a lot. Doesn't really matter what it is. And then over here is the plan for exploiting that behavior. So after every trade I take, I can look at both of these and I can evaluate, you know, was the behavior really there, or did I just take a trade at random? Did I trade it well? Do I need to change anything? Right? So I can make meaningful and educated decisions. I don't need to reinvent myself. I don't need to get frustrated. I know what I should be trading. I know if it doesn't go well, I can find the cause. You know, maybe I lost a trade because the market just didn't follow the behavior at that time. Absolutely fine. So key number 3 is make sure you understand at least one behavior in the market and then figure out how to try and trade it. And it won't take you long. Certainly less than the 5, 10, or 15 years a lot of people put into trading. Now, you have a good idea now of changes that you can make to get yourself moving towards profit and beyond. Changes that actually make a bit of sense. Not wacky ideas, not black box systems, not come and follow me. but actually a realistic approach that makes sense, an approach that doesn't take any more work than what you're doing, but does rely on you trying to become self-sufficient. Now, it's actually quite exciting to think that some small changes, in fact, simplifications to the way you approach your trading, could actually get you close to your goals. But it is actually a leap of faith to do that. That it's not about knowing more things or putting more hours in. It's just that a shift of focus is needed. And it's that shift of focus that we bring to the table. Now, hopefully what you've heard in today's webinar will inspire a few of you to perhaps throw away a few indicators, to stop looking for the easy way or shortcuts, to treat trading like a profession, because it is, and to respect trading, to respect that you're actually gonna need to put in some work and that somebody's not just gonna hand you a solution no matter how much money you give them. You can't give somebody $10,000 to become a doctor. But you probably can in some countries. But, you know, that's not what trading's about, and that's not what makes people successful, right? So just understand that the easy way and the shortcuts in trading are nothing but a series of dead ends. And a lot of you will just need to go to those dead ends before you realize that you need to do something else. Now, if you're considering a shift in focus and treating trading like a skill to develop instead of a problem to fix, that's a very positive thing. Now, the tools you've seen briefly today and those on this slide here are from Jigsaw. So what we do at Jigsaw is a little different from most. So we have a trading platform. We have a free chat room where customers meet to discuss their trading. So from the moment you buy our product, we put you in touch with other customers that are using it, right? That's how strongly we believe in what we do, right? We have the most advanced trading analytics anywhere so that you know if you're really improving or not. And we also have the best order flow training education anywhere. So we have a very specific focus. We focus on futures trading, and we only focus on the sort of techniques used by professional proprietary trading firms that we work with. So we give you the knowledge, we give you the tools, we give you the focus and the community to help you develop as a trader. It's that simple. That's what we do. Now, if you become a Jigsaw customer and you are struggling, I'm quite happy to get on the phone with you for free and just talk through your problems. I do it all the time. I do it 3 or 4 times a week with traders. Now, what we do here as well is something a little bit different. I don't build you up into a fever pitch. I'm not going to give you the, it's worth $1 million, but you can have it for one, followed, you know, maybe with a $1 course, followed by 300 emails a week, trying to get you to go for the next big thing and the next big thing. I'm not going to try and build you up into that fever pitch or maybe read you out a list of fake buyers that are buying it right now to make you think you're missing out. The offer here is really simple, right? We give you the tools and the education. We're there to help you. Other customers are there to help you. You put in the work and you get the results, right? Now, our professional package is $879. Gives you lifetime access to the platform, the advanced education, which is over 17 hours of the best order flow education available anywhere, gives you out lifetime access to the chat. Plus, if you want, I'm always more than happy to talk to customers if there's something you're confused about. It actually is for selfish reasons. If I talk to customers about stuff they don't understand, I can improve the products, right? That's the way we've always improved the products. But we are going to give you a special offer because we do want you to buy something in the next few days. What I would advise you to do is Google us. Google Peter Davies Jigsaw Trading. Have a look around. Have a look at the reviews. Go to independent review sites. Have a read about us. Just understand. You'll find out who we are if you do that. But we've got this offer for the next 20 traders. We are going to give an amazing deal. So normally the professional package costs about $300 more than independent. But for the next 20 traders that invest in Jigsaw, we're going to do that upgrade for $99 on top. So it takes it from $879 to $678. And I'll say our customers are not people that are new to the game of trading, but people that have been scammed a few times with one-dimensional systems. So if what you saw today give you some insights and maybe some perspective you never thought of before about actually getting to understand the markets, like where are the traders are positioned, where are the traders are going to get stopped out, then sign up and start developing the skills you need to become a profitable trader. And if you do, I'll see you in the chat right now. Let's see if we've got any questions. If you have got any questions, please have a look. Mark saying order flow, question mark. Yes, Mark, we are primarily order flow traders. I'd say most of our customers come to us Probably about 80% come to us, real hardcore chart traders, and they start using the tools to kind of supplement their chart trading. But over time, they do generally graduate more and more, fewer and fewer indicators, and more towards the order flow. Ed's saying these transferable skills, definition of insanity is doing the same thing over and over and expecting different results. It absolutely is. Philip, if you want to go for it, just go to jigsawtrading.com, traders talk. Philip, you know, if the middle of next week you are struggling, then just give me a call and we'll have a chat and we'll have a screen share and I'll show you a few things. Absolutely fine with that. More trading with less experience is more losers. Mark, yeah, absolutely. More trading with less experience means more losers. But what we try and do is we get you onto high frequency trading, which first of all give you some drills to do, right? So what you do is first is you've got your initial drills as you first come to order flow is just tuning your eyeballs to read this stuff. And then we give you trading drills to do. But absolutely right. We don't put you live until you're ready to go live. So you get on sim, you get the high frequency, you get that experience, and that builds you the confidence to get to live. What about being able to trade live from the platform? You can trade live from the platform. There's an additional $50 a month fee for that, but you get a whole bunch of other things with that. You get advanced version of the analytics. You get a real-time news feed, a real-time audio news feed, and like the advanced analytics with that. So with that, that is all the time I have back. I'm going to hand back to Traders Talk. So just go to jigsawtrading.com/Traders Talk. And,
actually, Peter, our next presenter is not on yet. I believe no, he's not on yet. I believe he's having some difficulties with his computer. So if you would like to answer a few more questions, or if you have like a few more slides that you'd like to go over, you can feel free to go over.
Yeah, well, what I'll do, if we just go back, I'll just go over this slide if you have a few minutes and just talk about this behavior. Because this was a real turning point for me, because one of the things I was using a lot of techniques that I'd been taught. I was lucky enough to be taught by guys in prop firms, met a lot of professional traders, but I was watching the open of the S&P 500, and basically what was happening is just into the open, you actually see in the overnight trade some areas with real high volume. And those areas of high volume, as long as they're not too far from where the market opens, the market will just like run to one and bounce off it. And it was something I was watching over and over again, but I'd always had in my head, people had always told me, don't trade the open. The open's a dangerous time to trade. And so actually I watched this and I thought, well, screw that. I keep watching this and I'm missing opportunities. So some of the trades I would take off the open would be like 7 seconds, 6 seconds after the 9:30 a.m. open. And at a time when people would say there's absolute insanity to trade. And one of the things you get when you sign up, if you do go sign up for special, you'll actually get a video that actually describes the rules for this trade, right? So, and then obviously the recommendation of the video is you observe this yourself. You might go and trade the NASDAQ or the Dow with it. You might trade the ES with it, like me. But it's a really strange phenomenon. And I've kind of come up with a few different explanations for it. Like people have been stopped out from that position. But if you've got high volume and it's like 6 or 7 ticks from the open, or even if you open in the middle of it, when you hit one of the extremes of that high volume, you just get this sudden bounce. And it's just a really good trade. Sometimes you end up like moving like quite a few ticks away from it. So that's one of the things. If you do get the offer, go and look at the Trading the Open video. It's really, really interesting because especially you'll be able to go and watch the open for the next 2 weeks. See it for yourself. You might find a different way to trade it than me. It's mostly about the behavior. I think Mark is coming on. It says Mark's coming on now. Is he ready?
He's still coming on. His link hasn't showed up yet.
Yeah. But no, like I say, the great thing about this trade is I was like mentally blocking it. I was actually watching the open every day. And that's the good thing about order flow as well, is if you're watching the order flow, it's always kind of moving and it's always doing something. If you're watching candlesticks as an intraday trader, I find it quite difficult because there's actually not a lot happening. If you're just kind of moving within a candle up and down, it can be a little bit slow. But anyway, so what we came up with, or I came up with, the rules were if that kind of high volume area is more than 8 ticks away, it doesn't really work so well. And the reason for that is if you trade high volume in an area and then the market moves down 20 or 30 ticks, the people that were positioned in that high volume area, a lot of them aren't going to be there anymore. Plus, what you're relying on when you get back there, you're relying on a reaction from short-term traders, right? So if somebody had positioned in that high volume area that was like an institutional investor, right? They're not going to react to the market going back to the area. So I have this rule: if you've moved too far away from that high volume, then when you get back to it, you're probably not going to see a reaction because the guys that were positioned there are probably unwound their position. So that's where that area comes from. If the market opens within the area, just take the first hit to the extreme. So if I open within a high volume area, say there's like 8 prices where we traded really high volume and then around it's low volume, whichever side it hits, I'll take the first one, right? If it opens outside the area, I'll take the first hit when it goes back to the area, okay? If that fails, I will take another trade on the other side of the range, right? Triggers, sometimes there's no trigger because it's really, really frantic behavior. But sometimes there's an iceberg area. Sometimes you see a rapid bounce and it moves back. Sometimes it's the NASDAQ and the Dow moving. Entry price, really you want to get 1 or 2 ticks away from the area. If you get more than 3 ticks away, it takes away your ability to, it takes away your breathing room in the trade. So quite a lot of the times you'll open in the middle of an 8-tick range, go to the extreme, bounce off, go to the other extreme and bounce back up. And if you took the first hit of the extreme, but you let it move away 4 ticks before you got into the trade, it takes a lot of the time away for you to actually manage the trade, and it lowers your risk reward for the trade. So it's like, and it's just little things like that that make it just a little bit easier to handle the trade, and that kind of tip things in your favor. Risk reward is a big thing. Well, when you say psychology, Ray, I think a lot of it, higher frequency systems, if you know you've got 2 hours to sit down and in that 2 hours, you're going to take 20 trades, psychologically, it is a lot easier to handle losing one of those trades.
Okay, Peter, so Mark is in the room now with us.
Fantastic. Well, good luck, Mark, and I hope it goes better than your kickoff did. And with that, I'd like to say goodbye. Good luck trading, everybody.